Welcome back to the Deep Dive. It is Wednesday, January 21st, 2026. And if you've checked your portfolio today,
Or your newsfeed.
or your newsfeed,
Right.
right, you might be feeling a little bit of whiplash. We are watching Davos, Switzerland very, very closely today. And let me tell you, the atmosphere is,
Well,
it's distinct.
it really is a study in contrast, You've got the World Economic Forum, which is supposed to be all about global cooperation.
Wait, high society?
You've got Tim Cook mingling with World Bank presidents, but then in the same hallways, you have this incredibly high-stakes geopolitical game of chicken happening.
And that game of chicken is exactly where we need to start. We're calling this the Greenland saga.
I mean, who would have thought?
I honestly can't believe we're talking about this, but a single geopolitical maneuver over an Arctic island sent the stock market into a complete tailspin on Tuesday and then triggered a record-breaking rally today.
It is a textbook example of just how quickly the narrative can flip in this new economy.
So our mission today is to connect these dots. We've got a massive stack of sources transcripts from speeches happening right now in Davos, CNBC financial reports, some heavy tech analysis on Blue Origin and Intel, and some really critical data on the housing market.
Yeah, a lot to get through.
We want to unpack how this new era of deal-making, or maybe we should call it intervention, is reshaping everything, from global borders to your satellite internet and even your credit card bill.
And intervention really is the key word here. The invisible hand of the market is getting a very firm handshake.
Or maybe a shove.
Or a shove, yeah.
Yeah.
It's a complete blur between political rhetoric and market reality.
So let's get right into it. The story that is absolutely dominating everything, the art of the Greenland deal.
Right. So to understand why the market is popping champagne today, you have to understand why it was hyperventilating on Tuesday. The backdrop is that President Trump had threatened to impose these massive tariffs on European nations. And we're not talking small tweaks. We're talking 10% to start, ramping up to 25% across the board.
And this was supposed to start February 1st. That's next week.
Precisely. The markets were looking at a guaranteed trade war with our biggest allies, happening almost immediately. But the condition for avoiding them, that was the kicker.
Which was?
Europe had to meet his demands regarding the acquisition of Greenland.
Wait, hold on. The tariff threat on all of Europe was leverage to buy Greenland.
That was the leverage point. And because the market hates uncertainty and it really hates trade wars, Tuesday was just a massive sell-off. It was ugly.
But then came Wednesday, the pivot.
The pivot. Trump met with NATO Secretary General Mark Rutte, and immediately after that meeting, the tone shifted 180 degrees.
How so?
The president announced that he has formed the framework of a future deal, or, as he put it later, a concept of a deal regarding Greenland.
I want to dig into that phrase, concept of a deal. It sounds incredibly vague. But looking at our sources, there are actually some pretty specific details emerging, right? It's not an outright purchase.
No, it's more nuanced than that. The reports suggest the deal involved the U.S. gaining exclusive access to mineral rights in Greenland.
Which makes sense, with the whole global race for rare earth minerals.
Exactly. But the second part is the security piece. It involves putting in a Golden Dome missile defense system on the island.
Golden Dome. Is that just branding, or is it a new tech?
It's largely branding for an expanded missile defense shield. Think Iron Dome, but on a continental scale. Strategically, putting that in the Arctic covers the whole northern approach to the U.S.
And how long would this last?
When asked, Trump just said, forever.
Forever. Okay.
Yeah.
But here's what I don't get. Why did the market go absolutely through the roof today? I mean, a missile dome is great for defense contractors, but the Dow surged over 700 points.
And the Russell 2000 hit an all-time high.
Right. Is the market really that excited about minerals in Greenland?
It's not about Greenland. It's about the concession. Because of this concept of a deal, those tariffs on Europe, the ones that were going to wreck supply chains next week,
They're off the table.
completely off the table.
So it was a relief rally.
100%. It was a collective exhale from Wall Street. The trade war was canceled, at least for now.
I want to take you inside the room at Davos for a second, though. Our sources describe the atmosphere during Trump's speech as, well, surreal.
I saw that people were queuing for 90 minutes to get in.
90 minutes. Tim Cook's there, Marco Rubio, and the source mentions nervous laughter when Trump said hello to his friends and some enemies. Then, when he brought up Greenland, the tension just spiked.
He asked them if they wanted him to talk about it.
Yeah. He said, I am seeking immediate negotiations. One attendee quoted in our notes literally called it scary. Another, a Danish attendee, was heard muttering, "This is ridiculous."
And that reaction highlights this major disconnect, right? The market loves the result stability, but the diplomatic world is looking at the process and they are terrified.
And, frankly, it sounded a bit chaotic. He kept calling Greenland a piece of ice, and at one point seemed to mix it up with Iceland,
Which is a whole different country.
a completely different sovereign nation.
But, and this is the crucial part that really cemented the rally, he explicitly said he would not use military force. That specific line signaled this is a negotiation. Aggressive, unorthodox, maybe confusing, but not an invasion.
So a concept of a deal stops a trade war. But while politicians are arguing over Arctic maps, the private sector is redrawing the map of space.
That's right. The space race has been reignited, but this isn't nations anymore. This is Jeff Bezos making a massive frontal assault on Elon Musk's dominance.
We're talking about Blue Origin. Usually we talk about Starlink for satellite internet,
Mm.
but Bezos is debuting something called TerraWave. And looking at the specs, this is not for scrolling TikTok.
No, and that's the strategic difference. Starlink has the consumer market. TerraWave is explicitly targeting enterprise, massive data centers, and government clients. This is heavy-duty stuff.
The numbers are just staggering. They're planning to deploy 5,408 satellites starting in Q4 of 2027.
A huge constellation.
And they're promising speeds up to 6 terabits per second. Now, I see Terra, and I know it's big, but can you contextualize that? How fast is 6 terabits, really?
Okay, put it this way. A terabit is 1,000 gigabits. 6 terabits per second is enough bandwidth to stream the entire Netflix library in 4K to thousands of people at once through a single node.
Wow.
It is a fire hose of data.
So this is for moving massive government data sets or banking ledgers, not for me getting Wi-Fi on a plane.
Exactly. It's the backbone versus the consumer edge.
But Bezos has a steep hill to climb, doesn't he? Musk isn't exactly standing still.
Steep hill is an understatement. Starlink already has 9,000 satellites up there, 9 million paying customers. They have the first mover advantage, the infrastructure.
And there's that weird internal rivalry too, right? Because Amazon, the company he founded, has its own competing project.
Yes, LEO, which used to be Project Kuiper. They've already launched 180 satellites. So you have Bezos's private company, Blue Origin, competing with his former company, Amazon.
It's a complex web. But Bezos seems incredibly confident. He made a prediction that Blue Origin will eventually be a bigger company than Amazon,
He called it the best business I've ever been involved in.
which is a bold statement from the guy who built the Everything store.
It is, but it tells you where he thinks the real value is. He's betting that orbital infrastructure, the roads and bridges of space, will be more valuable than all the commerce on Earth.
Speaking of valuable infrastructure on Earth, let's pivot to hardware. Let's talk chips. Specifically, Intel.
This is a comeback story that, I don't think many people saw coming a few years ago. Intel was basically left for dead.
And now. The stock is surging. It jumped 11% today, hitting its highest point since early 2022. It's trading above $54.
If you zoom out, the stock's up over 140% in the last year. It's a massive turnaround.
So what's driving it?
Well, it's a convergence of 3 factors. First, the obvious one, AI infrastructure. Everyone talks about NVIDIA, but you need traditional server CPUs to run those systems.
Okay.
KeyBank analysts are saying Intel is likely sold out of server CPUs for the entire year.
Sold out for the year. That's wild demand.
It is. Second, they have these huge foundry ambitions, building chips for other people.
Right. But the third point, this is where I want to dig in. We talked about intervention. The source material mentions the U.S. government is now the largest shareholder in Intel.
Yep. After an $8.9 billion investment.
Doesn't that change the whole nature of the company? If the government is your biggest owner, are you really a private company anymore?
That is the deeper insight here. Intel is, in effect, becoming a state-sponsored utility for silicon. It's a kind of soft nationalization.
Why?
Because the U.S. government cannot afford for Intel to fail. It's a matter of national security to have chip production here at home.
So when you're buying Intel stock, you aren't just betting on chip sales. You're betting on the U.S. government's commitment to keeping it alive.
Precisely. It's a safety net other companies just don't have. And then you add NVIDIA investing $5 billion to integrate their chips with Intel's. So you have government backing the factory and the market leader backing the tech.
A powerful combination.
It's very powerful.
So Intel is what happens when the government wants to be your partner. But let's contrast that with what happens when the private sector fights back. Let's talk about Jamie Dimon.
The CEO of JP Morgan Chase, he was at Davos, and yeah, he did not hold back. He offered some rare, very public criticism of the president's policies.
It feels like he's positioning himself as the voice of the market against this intervention theme. He started with immigration.
And this was significant. Usually CEOs talk about immigration in these vague terms, talent. Dimon specifically referenced a video of ICE officers. He described it as 5 grown men beating up a little old lady.
That is a very visceral image to bring up at an economic forum.
It is. But notice his framing. It wasn't just a moral appeal. It was hard-nosed economics. He's arguing that, sure, border control is necessary, but the U.S. economy is facing a labor crisis.
In what sectors?
He mentioned hospitals, hotels, agriculture. He's basically telling the administration, if you deport these people, your economy stops working.
Mass deportation is bad for business.
Mm.
But he didn't stop there. He went after the proposed 10% interest rate cap on credit cards.
Right. Trump is pushing for this cap, arguing it helps consumers. Dimon called it an economic disaster.
Now, play devil's advocate for me. If I'm a listener with credit card debt, a 10% cap sounds fantastic. Why is Dimon saying it's a disaster? Is he just protecting his profits?
Well, obviously banks want profits, but here's the mechanism he's warning about. Credit cards are unsecured loans. They're risky. If you have a high chance of not paying it back, the bank charges a high interest rate to cover that risk.
Okay, makes sense.
If the government says you can only charge 10%, the bank just recalculates. They'll look at anyone whose risk profile is higher than 10%, which is roughly 80% of Americans.
And they'll just cut them off.
They'll just stop giving them cards. So instead of a cheaper card, you get no card at all. You delete the subprime credit market overnight and force those people to go to, payday lenders.
And Dimon proposed I have to call it a sarcastic experiment to prove this.
It was definitely strategic sarcasm. He suggested the government should force this 10% cap only in Vermont and Massachusetts to see what happens.
The home states of Senators Bernie Sanders and Elizabeth Warren.
Exactly. He's throwing down the gauntlet. He's saying, if you think this is such a good idea, test it in the backyards of the people who support it.
It's fascinating. So let's move to our final segment, hitting a bit closer to home. Housing.
Yeah, the data here is not great.
It's a slump. Pending home sales dropped sharply in December, down 9.3%, and inventory is just incredibly low.
It feels like gridlock. But there's a new idea that came out of Davos from Trump, again, to try and fix it. He floated a new tax concept, letting homeowners deduct depreciation on their personal homes.
This sounds radical. Help me out, because I thought depreciation was for things that lose value, like a car. Houses generally go up in value.
That's the magic and the controversy of real estate tax law. For businesses, you can claim a building is wearing out over 27.5 years. You get to deduct that phantom loss from your income, lowering your taxes, even if the building's market price is skyrocketing.
And right now, only landlords and businesses can do that.
Correct. Trump is saying it's crazy that corporations get this break, but families don't. If this passed, a regular homeowner could shield a huge chunk of their income from taxes.
A massive subsidy for homeownership. And this pairs with the executive order from Tuesday banning large institutional investors from buying single-family homes.
So again, the theme. Intervention. Punish the big corporate buyers and incentivize the individual buyer.
Before we wrap, a quick check on media. Netflix seems to have cracked the code on ads.
They have. Ad revenue exceeded $1.5 billion in 2025. They have 325 million global subscribers. It's working.
And Meta's Threads is actually overtaking X.
In daily active users, yes. They're at 400 million now, and they're rolling out ads. It seems the advertisers who left X needed somewhere to go.
So we've covered a massive amount of ground, from Greenland to space to chips and credit cards.
And if you look for the thread connecting all of it, it really comes back to that word, intervention.
It feels like 2026 is the year the government stops sitting on the sidelines.
Absolutely. Whether it's banning investors from housing, capping rates, or buying a stake in Intel, the state is becoming the central player again. The era of just letting the market do its thing seems to be on pause.
So what does that mean for you listening? It means you can't just look at a company's balance sheet anymore. You have to look at who they're shaking hands with in Washington.
And here's the provocative thought I want to leave you with. We started with the Greenland saga. A trade war was averted, and the market rallied to record highs, all because of a concept of a deal.
A deal that isn't signed, a missile dome that isn't built, mineral rights that haven't been mined.
Exactly. The global economy swung by billions of dollars based on a verbal promise. So the question is, How stable is a system that relies this heavily on the concept of a deal? Are we trading on economic fundamentals, or are we just trading on the hope that the next handshake holds?
That is a very expensive question, something to mull over. That's it for today's deep dive. Thanks for listening, and we'll catch you next time.